My name is Abimanyu Nugroho with NPM 22412011. Here I will be explaining about accounting theory and its orientation. Definition of accounting theory. The theory is something abstract, something ideal, the opposite or pair of something real or practical, scientific explanation, logical reasoning. Accounting theory is a science, a set of systematically interrelated concepts, definitions, and propositions or statements proposed to explain and predict accounting phenomena. The accounting phenomenon of concern is the decision or behavior of parties or humans with an interest in accounting. Accounting theory is a technology, logical reasoning that underpins accounting practice. The process of reasoning to justify the appropriateness of a particular accounting practice or principle. Technology is inherent in financial reporting engineering. The engineering results are documented in the form of conceptual framework. Definition of accounting theory. Suwarjono 1989 suggests 5 kinds of understanding of theory as follows. First, theory as opposed to practice. A theory is an ideal as opposed to something that is actually done in the real world, contain provision or rule that should be carried out. Second, theory as justification. Theory is an explanation of reasoning about facts or actions or deeds that are real-life practices. Third, theory as scientific explanation. Theories are statements about the relationship between the behavior of natural or social variables that can be used to explain and predict natural and social phenomena. Fourth, theory as model. A theory is representation or abstraction of something that exists in the real world. Fifth, theory as logical reasoning. Theory is a process of thinking or reasoning using relevant concepts as a basis for explaining the feasibility of certain principles or practices that are already in place. Benefits of logical reasoning outlined in the form of conceptual framework. First, evaluation reference of current accounting practices. Second, new practice development directions. Third, basis of accounting standard derivations. Fourth, basis repair practice running. Fifth, potential troubleshooting guideline. Accounting theory perspective. First, the existence of various accounting methods. Second, use of paired system, debit and credit. Third, requirement to prepare cash flow statement. Fourth, the statement that current cost accounting is more relevant than historical cost accounting. Fifth, the risk capital market reaction to the issuance of earning information. Objectives of accounting theory. First one is positive. Explanation of reasoning to scientifically demonstrate the truth of accounting statements or phenomena as they are according to the facts. Facts as targets. For example, positive accounting theory proposes a proposition of hypothesis that manufacturing companies tend to choose MPKP or FIFO while trading companies tend to choose LIFO. Positive accounting theory seeks to determine whether the hypothesis is true or false by using the scientific method, science on the basis of observation or real data, happen objective. Second is theory normative, explanation or reasoning to justify the appropriateness of an accounting treatment based to predetermine objective value as a target. For example, normative accounting theory seeks to answer whether historical cost accounting is better than current cost accounting for achieving accounting objective. The determination of fitness for purpose will be subjective process involving the ability to weigh the benefits and risks or gains and losses. Semiotic level of accounting theory. First is semantic. Semantic discusses the symbolization of activities or physical reality into symbols of financial statements. For example, in defining asset, control rather than ownership is used as a criterion because if ownership becomes an asset criterion, there will be many objects that are not included in the assets. This theory explains that earnings on actual basis are an indicator of the ability to bring in cash in the future. So cinematic accounting theory is concerned with the symbolization and interpretation of accounting objects to produce meaningful semantic information. Second is synthetic. Discusses the measurement, recognition, and presentation of elements in financial statements and the structure of accounting. For example, this theory provides a rationale for why data or information is presented in a certain way, provided explanation and reasoning about what to report, who reports, and when to report and how to report it. The structure of financial statement describes the functional relationship of the sender, the language rules, the business communication between the recipient and of the report and the recipient is effective. Third is pragmatics. Discusses whether financial information is effective or useful for the intended audience in accounting engineering. Thus, information affects user behavior. For example, this theory provides a rationale for why information affects the behavior of users, including capital markets. A message or event such as profit announcement is said to contain information if it causes a change in perceptions beliefs. Reasoning approach. Reasoning, the process of thinking logically and systematically to form and evaluate the validity, feasibility of statement, conclusion, explanation, or principle. First, deductive. Derive statement, conclusion, explanation, or principles based on general concepts, bases that are agreed upon and considered correct. For example, the use of deductive reasoning is that accounting presents assets at historical cost because accounting addresses the concept of business continuity. With this concept, the role and function of accounting, in this case the balance sheet, is to show determining service potential. Inductive brief statements, conclusion, explanation, or general principles on the basis of observation of several cases or events. For example, observation shows that the volume of shares of some companies that are traded a few days after the issuance of financial statement increases sharply. Therefore, it can be concluded with a certain level of confidence that accounting information is useful for investors in the capital market.